Mr. Alok here, who is the Group CEO of Indorama Ventures. Mr. DK Agarwal, who is the CEO of PET and now PTA and MEG also. Sorry. And at the end there, Mr. Vikash Jalan, who's handling our corporate finance and accounting. So what we'll do today as normal is we'll do the presentation and then we'll give time for Q&A at the end. Anyone that's listening online can start asking questions at any time they want, and we'll handle that as we go along. So I'd like to ask Mr. Alok here to kick off the proceedings with the first part of the presentation. Thank you, Mr. Lawyer.
Thank you, Richard. Good afternoon, ladies and gentlemen. So I'd like to go on to page number 5 to start off with a quick financial update. We just released our quarter 2 results, and as you can see from the quarter 2 results, our reported EBITDA was slightly better than the previous quarter, but the true-up EBITDA, the core EBITDA, was significantly improved from 84 million to 151 million US dollars. Even truing up further, removing the new assets of MEG, the reported EBITDA per ton improved from the core EBITDA per ton improved from $71 in Q1 to $87 per ton in quarter 2. So both the existing business and the new business combined delivered significant returns and improvement over quarter 1. It can be seen also on the right-hand graphs that the core EBITDA by segment on an annualized basis was the highest we have achieved, better than the average for 2011 at $552 million. The annualized quarter 2 EBITDA is $603 million US dollars. EBITDA by region is also good. The EBITDA coming out of North America is dramatically improved, obviously with the inclusion of MEG business, and the core business of PET continue to be very strong in North America. Where we are lagging is essentially in Asia, and there are 2 reasons why we lag in Asia. One is that there is a lot of new capacity coming up in Asia, especially in PTA, and therefore we are hardly getting any EBITDA actually in Asia from our PTA business in 2012. The second factor affecting Asian returns is also that our Lopburi site, which was our legacy site, our first site, and where we had our PET business, our packaging business, as well as our wool business, was offline for most of the first half. So we do see some recovering potential in Asia. We have acquired a new business, Polypet, in Indonesia. We have just expanded our China operations, and we have the recovery of Lopburi from its floods. As well as I think PTA was way too low in first half, so there could be some improvement in the PTA spreads in the second half. Going on segment by segment, on slide 6, we still have the company facts. So the volume has grown by 63% annually over the last 4.5 years, and EBITDA has grown at a rate of 58% per annum. The long-term average EBITDA per ton, trued up for MEG, is $126 per ton. When we drew up our Aspiration 2014 plan, that was at $116 per ton. But since then, we have added some value-added businesses to our portfolio and the MEG business. So based on those businesses, the long-term average is now at $126 per ton. So this is the number that we would take internally for our projections going forward. The company employs over 9,000 people spread globally. The IVL capacity in 2012 has reached now 7.6 million ton with the latest acquisition of Polypet in Indonesia. This capacity is including joint venture capacity of approximately 1 million tons. So the EBITDA that you see is coming from our consolidated capacity of 6.5 million tons, excluding the JV capacity. On the same slide on 6, you can see our capacity by region in the pie diagram on the bottom right, and our core EBITDA from regions. And as we discussed in the previous slide, the Asian EBITDA is not in ratio of the capacity that we have in Asia. So this is the area where we are hoping for upside going forward. Moving on to slide 7. The PET segment has delivered better core EBITDA than the previous quarter. The revenue number is slightly lower than the first quarter, but this is because the absolute prices of all commodities came down dramatically in second quarter. So we have improved our quantity from 616 kilotons to 631 kilotons, but the absolute growth of top line was slightly lower. But in terms of core EBITDA, the improvement was significant from $53 million to $69 million. In the PT segment, we continue to see good traction going forward. In the second half, we expect to get additional capacity of 500,000 ton coming from our China expansion, the Rotterdam expansion, which is due to start up in September, the acquisition of Polypet in Indonesia, and the full production of Lopburi in the second half. In the PT segment, we also have a benefit going forward in terms of our conversion costs, since natural gas prices in North America are at historical lows and expected to continue at this level due to the shale gas advantage. We did not see all of that benefit in the first half because we have hedged. We work on a hedging system for our cost. So most of our natural gas requirement in North America is hedged for 2012. So this advantage we will start seeing more like in 2013. On to the fiber segment, which is our second downstream segment. This segment has seen significant improvement in the core EBITDA from 17 million to 27 million in this quarter. The production was slightly below first quarter production, and the top line was also below the first quarter, and that was because of the absolute prices of polyester coming down, like all other commodities in the second quarter. In the bottom right-hand graph, you can see that the second quarter EBITDA per ton is at $128, is above the long-term average of $128. Remember, all our long-term averages are based on our portfolio of products. So in polyester, we have a portfolio of specialties, and there is a later slide where we'll talk about our specialty business. But the second quarter has been a significant improvement over the first quarter. Coming to the last segment, on page 9, the feed. We have renamed our PTA segment as feedstock segment with the inclusion of the MEG business. As you can see from the bottom right-hand graph, the EBITDA from this business is still below the long-term average, and this is due to the state of the PTA business in Asia. The PTA business in Europe is still steady, and obviously the bright star in this segment now is the MEG business. The MEG business was a timely acquisition for IVL, and this is the strength of management. Management has been, over the years, been adding to the portfolio of IVL businesses in our core business, in the polyester value chain, where we have the expertise. and we continue